Anyway, welcome. Appreciate everybody taking time out their Sunday to join us. Uh, as some may or may not know, what we've been doing really since the family reunion, the virtual family reunion, is getting together to truly pass it on, that knowledge that we talk about. So Vince actually brought me in, which I'm thankful for that. That they had an idea to start talking about how we want to create not just the knowledge, but generational wealth and have our youth and the generations coming behind us leave them some type of information or a legacy, if you will, that will help them take our family to the next level. So today's installment, we're talking about credit. Our guest speaker or guest presenter, if you will, is Carrie Winborn, my first cousin, daughter of Bessie Winborn. Son of Bessie Winborn, sorry, grandson of Alice Williams McNair. And I'm going to pass it off to Vince because I think, that's just a brief intro, but Monique, I think, is doing the actual intro to Carrie. But I just want to kind of bring you guys together, let you know what we're doing. So thank you for joining. We are recording these sessions because we want to continue to, like I said, pass it on. We think it's important that the youth gain this knowledge that the family has that will take that Williams Lock legacy to the next level for generations to come. So Vince, I'll pass it to you, and you can kind of tell us which way we want to go from here.
Okay, I'm going to defer to Monique and pass it on to her so she can go and introduce our speaker.
Hello, family. Welcome. I have the pleasure of introducing our family member, Carrie Winborn the fourth, who you guys all know. But we all know each other in a family, personal capacity, and sometimes we don't really know about all the great subject matter expertise in our own family. And so I was really just amazed looking at what Carrie sent me for his bio. As you see, he has almost 30 years of experience at Bank of America, which is amazing. It's one of our largest banks in the nation. He currently serves as the vice president, senior project consultant, overseeing 40 employees on a mortgage loan platform where they're currently reviewing about 10,000 different policies and procedures. And he's had several other roles in addition to one he currently serves in at Bank of America. Those include branch manager, mortgage loan officer, small business administration, lending consultant, compliance officer, policy and procedures operation manager. So that's definitely such an impressive long resume. We're just privileged to have him here talk to us. He's also serves as the board of on the board of the Sacramento Diversity Network and Volunteer Network for Bank of America, and is president of the Bank of America Toastmasters, which, as you know, is a speaking network, and he's even advanced to the semifinals of the national speaking competition. So very, very impressive. We're just really excited that he's here to share his expertise with us today. So thank you, Carrie, passing it on to you.
Absolutely. Yeah. Thank you for the introduction. Please don't hold that president of the Toastmasters Speaking Network. Don't hold me accountable for that today. Keep it casual. But I appreciate, as Aaron mentioned, it sounds like Vince brought him into this group, and Aaron is the one who reached out and contacted me and asked me to help out with the presentation today. So I just want to thank Aaron again for including me in this. I think it's awesome to see our family doing this. I've talked to a couple of my friends before and let them know all the things our family does. And I mentioned this specific presentation and this program to them, and they're blown away. So just an awesome family that we have, as you all know. I think what we were going to do is we have some Q&A session that we're going to do. Aaron, I don't know if you're going to facilitate the questions and we talk through it. And if anyone has any feedback or anything they want to chime in on, they definitely can. Just in general, talking about credit, we were trying to decide the right way to do this. If we wanted to talk, to get to the fundamentals of credit and just the basics. We didn't know what the understanding of how people how much experience they have with credit. There might be people that are very experienced in credit and already have their views. So we wanted to sort of keep a balance there of giving a little bit of background on fundamentals and then also getting into details in some specific areas. So just in general with credit, as you all know, credit it's a tool that you can use for either large purchases or small purchases. Your credit history can help you or hurt you in a lot of ways in life. One of the things, sorry, I got a phone call there. One of the things that that it can determine, you know, when you're getting credit cards or you're getting a loan, you already know your credit history is going to determine your interest rate. It can determine how much of a down payment you have to make when you're trying to purchase something. But it can also determine if you're trying to buy insurance. Sometimes they'll look at your credit history on insurance. It can impact your insurance rates. If you're trying to rent or buy a house, that could, you know, they look at that to determine whether or not you qualify. So it's not just credit cards and loans that your credit history can impact. It can impact you in many different ways in life. There's a lot of different ways to establish credit. We're going to talk about a lot of those today. We're also going to get into a little bit on how to maintain your credit history once you have some credit established. So hopefully the questions and answers that we have prepared for you today will give you some information, but we want this to be a dialogue. So if you have any additional questions or feedback you want to provide, feel free to jump in at any time.
Thank you. All right, so as the moderator, I'll get it started. So our first question, Carrie, as a parent, how do I help my child to begin understanding credit?
Yeah, that's a very, very good question to start off with. There's a few different ways that you can do this. One thing is to start the discussions early, and early I'm thinking, you know, once they have an understanding of money. So maybe their preteen years or right when they turn into their teenage years, when they're starting to get into high school and looking for jobs, things like that. Start those discussions early, you know, talk to them a little bit about your credit. You know, sometime when you're sitting down paying your bills, you can have your kid come over and you can let them know, hey, here's some of the bills that I have. Here's why I have them. You know, show them on your credit card statement, on your loans. Here's what this loan is for. Here's how I got it. Here's how I'm paying it back each month. Here's how much it costs, et cetera, et cetera. So just giving them a little bit of background as to how you're managing your credit currently can help them in the long run to understand the general fundamentals of credit. Another practical way that a lot of people in the banking industry, they try to handle their children is use their allowance as their credit line. So if they want to purchase something that they don't have the money for right away, and you can go to them and say, hey, I'll get this for you, but you're going to have to pay me back each time I give you your allowance. And that gives them a general understanding of, you know, here's how credit works. I can get something now, but I'm going to have to pay it back little by little each time. It's going to take money out of my pocket down the line. You can even get strict on them and charge them interest, but I don't know if you want to go that far. But just getting them involved at an early age and just as soon as they start to understand the concept of money, introduce them to what you have. When you're in the store and you're out grocery shopping and you're paying with your credit card, you say, I'm going to use this card and show them. And then when you get your bill later on, you say, hey, you remember when we went grocery shopping a couple of weeks ago and I used this card to pay for it? Here's now where I have to pay that money back. And if I don't pay it back, here's some of the consequences. So just getting the, you know, those little practices and the real life examples of how you're using it, give them some exposure to that at an early age. And I'll open that up to anyone else who might want to chime in too.
And don't be shy, family. We're all together here.
Yeah,
I guess my question would be, what's an allowance?
Oh.
Amen to that.
So, Carrie, I have a question about credit card fraud because I'm basically a cashless person. I use credit cards for just about every purchase because I enjoy accumulating the reward points and redeeming them for travel and things like that. But lately, you know, in the past 6 years, I've been through probably 5 different credit has been you say about either protection and
I'm not,
Hey, Hugh, I'm sorry. Are you breaking? Is it just me? He's breaking up
no,
on my side.
mine is breaking up too.
Okay.
Mine
Yeah.
too.
It might help
Yeah,
if we cut video to save to free up the bandwidth.
Okay, cool beans. So stop video.
Stop video.
Yeah, do a stop video on your screen. That'll give us more bandwidth.
Identity theft.
Everybody still there?
Yeah, we're
Yeah.
here.
Okay.
Yeah.
I can't hear him right now. I don't know if he's.
It looks like he dropped.
Oh,
Yeah.
Okay, let's move to the
Yeah, I
next
think-
question. They'll have to join in. Maybe we can pick it back up. Oh, here I think they're coming back on.
What? Oh, I hear you.
Are they coming back?
Yeah, we can, if they do come back, we can definitely pick up from there.
Sure, of course.
Get Hugh to ask his question again. So just keeping in that same theme, Carrie, especially since we're all parents here on this line and we're talking about, the future and our children, should we help the children start building their credit?
Absolutely, yes. There's several reasons on why you should. First of all, you'll be doing them and yourself a favor as they start to get older and have more financial needs down the line. At some point, they're of course going to want to purchase a car, or they're going to have to go and rent an apartment. So if the earlier that you can help them establish that credit history, the better off it will be for them in the long run. There are several ways that you can help them to start and build credit, and it's never too early to do it. There's a couple, I'm trying not to get ahead of myself here. There's a couple of things that we can do to help them build the credit. The first thing is, you can add them to some of your accounts, you can co-sign for them, and we'll get into more details on this later. And you can, of course, help them with their bank accounts, things like that. But there is no negative or no downside into helping them establish credit at an earlier age. And I think it would be beneficial if we all made sure that we helped our kids do that. The one thing you do have to do is try to monitor them. Myself as a kid, I was out spending money like it didn't matter. And, you don't realize that's going to catch up to you later. So if you do start helping them establish, or you start adding them to your personal accounts or your credit cards, you definitely will want to monitor them regularly, make sure they have spending limits, things like that. But again, it will help them down the line and help you in turn as they get older and have those bigger purchase needs if they already have that credit established.
So along those same lines, if we added them as an authorized user, does that help them build their credit, or is that just for them to use the cards?
Yeah, it does help them. And, I had to do a little bit of research on this. In the past, adding someone as an authorized user did not necessarily help their credit. But that has changed, and I don't know when it changed. But yes, it does help them with their credit, especially if it's someone who is just starting out to try to build credit, or they have a limited amount of accounts on their credit report. If you add someone as an authorized user to your account, it does show up on their credit report, and it does show the entire history since the account was opened. It doesn't just show up, on the date that you added them. So if you've had an account for 10 years and, say tomorrow you go and add someone as an authorized user to your account, that whole 10-year history will show up on their credit report. So keep that in mind. If you have any negative history in the past on that account, that will impact the kid's account as well. Or if you have the positive account, of course, it will positively impact the account. So those are things to keep in mind. And there's several different rules around it. Different financial institutions and different banks have different minimum ages that you can add kids to account. Some of them are 16 years old, some will go down to 13, and some have no minimum age. So depending on who you're banking with or who you have your account with, they could have different requirements, but it's definitely worth checking into because it does help them in the long run. On their credit report, it does show them as an authorized user. It doesn't show that it's their account. So the history will be there for them. It'll help with their score, but it does show them as an authorized user. So, when they go and apply for something later down the line, they might not necessarily look at that account as strong because they know that it's not their account, but it does impact their overall credit score.
Well, that's good to know. I didn't know that either. I always thought authorized user just meant I'm letting you use it, but I'm the one paying the bill, so it's still my credit.
That's exactly what I thought too. Yep, exactly what I thought.
I have a question about that. So if, say that, whoever the authorizer is an adult, and then they want it removed from their credit, so does that erase their whole entire credit history?
You cannot remove anything from your credit report. Once it's there, unless it goes into an inactive status, and it will drop off after either 7 or 10 years. But you can't remove something from your credit report unless it's fraud related, something like that, or if you had like identity theft. Those things can be cleared off your credit report, but nothing else outside of someone mistakenly or purposely opening something in your name that you aren't responsible for, it would not be able to be removed from your report.
But do you see how that could be problematic for some of the children because they didn't get consent to be added as an authorized user? And what if they're on it and their parents are not as responsible with their credit, and it impacts them in the long run?
Yeah, that's a very good point. I mean, I don't think, well, hopefully no one would go and purposely add their kid to it with the intent or knowing that down the line, or that they could run into some financial problems, that some of those things are unpredictable. But you're kind of at the mercy of that parent. If they add you there, I would imagine there'd be a conversation before that happened. Hey, I'm going to add you as an authorized user to this account. Here's what it means. Here's, what the benefits of it are for you. Here's what the potential risk could be as well. And, if the kid doesn't feel comfortable, they could say, no, don't do it. I'll build my own credit, of course. But, if it's at a younger age and the parent just does it, intentionally to try to help build them credit, that's a risk that's out there. You can't predict the future. You could run into financial issues, and that could negatively impact the kid's credit, but they don't have the ability to remove that from their credit report at a future date.
Hey, Carrie, can I chime in on this topic? I know we got a lot of stuff to go over. I just wanted to throw in something.
Absolutely. Yeah.
Okay. So just to stay on this topic and clarify a few things, because I kind of have did a little bit of research on the authorized user situation, and it does to answer that last question, like somebody that I know that was an authorized user, and then someone took them off of their account, all of that positive history went away. So all of that positive history can also go away and affect your score in a negative way. Or, if someone doesn't pay a bill or something like that on time, it also affects that person that's the authorized user score. Absolutely. So when you want to use it for your child, you do want to do the research, and you do want to monitor it very closely and have a plan for it to work specifically for a goal for your child, like to get them to a certain place financially and understand the concepts of credit. But I just want to let people know that we're going to have another session that dives deeper into the tools that you can use to help build your credit for your children and things like that. So don't worry if we have more questions, if there are definitely way more nuances that we have to get into that'll really kind of steer you in the right direction of helping your child build their credit. But just so it's to be known, it is a very, very vital tool in building credit. If we can get our children on as authorized users at an early age and get them already acclimated to the system before the age of 21 and put them in the game, they'll already be in a position to finance cars on their own, get apartments on their own, and build to bigger things on their own at a way earlier age. So it's very, very important that we pay attention to this authorized user thing, because it jumps. It's the same thing as getting loans. It jump starts you 10 times faster than where you would be at in life.
Yeah, thanks for chiming in, Shed. Appreciate that.
I have a question. What do you think about student accounts, student credit cards?
Mm-hmm. Yeah, another good tool that kids can use to establish credit early. Again, we talked about monitoring the usage. I know it gets harder with student accounts because typically banks will do that around the college years at around 18 years old. So they're legally on their own. But being a student, it lowers the qualification criteria. So it is definitely a good tool that kids can use to start establishing their own credit history without having to be an authorized user on someone else's account or having a cosigner. Being a student, there's a lot of benefits, and lower qualifications for credit is one of them.
Thank you, everybody, for your questions. This is a great session. To kind of build off of that, a good segue, Carrie, you just mentioned it about a cosigner. So does one need a cosigner when establishing credit?
Typically, yes, you would need a cosigner, especially if you're just starting out. If you don't have a credit history, or you've got, something very small on your credit, then if you're looking to try to get like a car loan or make a major purchase or get a higher limit on your credit, then yes, typically you would need a cosigner. There are other ways to establish credit without a cosigner. We mentioned the student credit cards is one of them. There's also what they call secured credit cards and secured loans. And what a secured credit card is let's say you go to your bank and you put $500 into a savings account. The bank will put a hold and freeze that $500 in the account, and they'll issue you a credit card for that amount. They'll hold that money in your savings for about a year. 12 months is typically the term that you have, where they hold the funds, and you just use the credit card like a normal credit card. The $500 is held there just in case you can't make your payment, or if you default on the card, the bank doesn't have any risk because they have that money sitting in that savings account. So again, if you're looking to either establish, or if you have, some negative credit history and you want to start rebuilding your credit, you could do one of these secured accounts. If you can put that money into account, and it can range, I think they go as low as $250, and you could go as high as $5,000. And they'll issue you that credit card, and you use it like normal as long as you have a positive payment history for that 12 months. At the end of the 12 months, they'll release that money back to you, and you still have the credit card to use as you would. So that's another way to establish credit. For younger kids, another way to get easy credit is going through like department store cards. So if you have like a Macy's card or any like Gap, any of those type of major stores, they have their own credit cards as well. And those balances are lower. They usually issue for like, $100 to $500 to start off with. And that's another way for you to establish a payment history. And as you make your payments on time, they'll increase your limit for you as your credit history becomes more solid. You do have to be careful on those accounts because the interest rate on those are a lot higher because the dollar amounts are lower and there's more risk on those cards. So sometimes the interest rate can be like 20 to 30%. So if you do get those cards, I'd strongly advise that you use it, for a purchase, and then you pay that whole thing off that following month. Don't let the balance start to increase on you where you have to make the minimum payment. Just use it to establish your credit, pay it off each month so you're not paying any interest, and that will start to build your credit score just like a larger credit card would. So a couple of ways that you can help establish credit without a co-applicant.
So quick question, what is a good interest rate? I mean, other than zero, of course. What is a good interest rate?
Right now, interest rates are very low just because of the economy. So you can find credit cards with extremely low rates. You know, if you have established credit, you could probably find some, you know, under 10% for sure, and some even around the 5% range. If you're just starting out with credit, your interest rate's going to be high no matter what. But if you use your card responsibly and you only use it to establish your credit and you pay it off each month, you won't be paying any interest at all. I know that's not always possible, but you know, if you can stay, they want you to only make that minimum payment so that you're paying them interest. But if you can always try to make more than just a minimum payment, that would be great. So starting off with credit history, you're probably going to have around a 15 to probably 20% interest rate on a credit card. But again, as long as you make those payments or keep your balance low, you won't be paying as much in fees if you can, you know, make more than just a minimum payment there.
So when you're talking about establishing credit and those credit scores, what type of scoring system are the finance companies looking for?
Yeah, that's a good question. There are 3 different credit agencies that most financial institutions use. There's a couple of new ones that are coming into play, but there's 3 that have been around forever. There's Experian, TransUnion, and Equifax. And all 3 of those credit bureaus use the same type of scoring, which is the FICO score. And FICO stands for Fair Isaac Corporation, which is a company that established this whole scoring system. I'm sorry, did someone have a question? No, all right. So the scoring system, your credit scores, they can range anywhere as low as 300 up to like 850 to 900. And of course, the lower the score, the worse the credit score is. The higher the score, the better the credit score is. Typically, if your score is around 600 to maybe 680 or 90, that's considered average credit or good credit. Anything from 690 maybe to like 720 to 730, that would be considered above average credit. And then anything 730 or 750 and above is considered exceptional credit. If you're below 630, that means you probably have some negative history or a very limited amount of credit on your report. And when you have the lower credit scores, that's where sometimes if you're going to purchase a car, you may not qualify. Or if you do qualify, they're going to ask you to put a larger down payment on the car. Or, you know, sometimes at the lower credit scores, on the credit cards, as we discussed, you're going to have a higher interest rate on credit cards. So a lot of what you pay in fees, in down payment, and in interest is going to be based on what your score is. So the general ways that credit score is determined, there's like 4 or 5 primary things that you can do to improve or to hurt your credit score. One of them is your payment history. That's probably the largest thing that will impact your credit. If you make your payment every time, even if it's just the minimum payment on credit cards that you make every month, but you're making it on time, that will significantly help your credit score. The longer that you have credit established will also increase your credit score. So if you're starting off now, you're probably going to be on the lower end, but if you get 5, 10, 15 years of credit, that score will again help increase as long as you still make those payments on time. They also look at your balances that you have on your credit cards. If you say you have $1,000 credit limit on your credit card, but your balance on your card is always at like $900 each month and you're making the minimum payment, your credit score is impacted by how high the balances that you have on your credit cards. So that's why we talk about keeping them below 50% of the credit limit. So if you have $1,000 credit card, you want to try to keep it around the 500 or below, so it doesn't look like you're overextended on your credit, because that again lowers your credit score as well. The other thing you want to look at are the different types of accounts on your credit history. You want to have credit cards. You can have a car loan. You could have personal loans. You could have a mortgage, of course. And the more different types of credit on your account, that shows that you can handle different responsibilities, and that can increase your credit score as well. And anyone feel free to chime in if you want to add to that.
Well, this is good information.
Carrie.
Go ahead.
Okay, Carrie, this is Marie.
Hey, Marie.
I have a question about finance. Now that mortgage and home equity loans have a low interest rate, would you advise someone who owes a lot of money on credit cards to tap into the equity to pay off their credit cards, since credit cards usually run around 18 to 22%? Should they take advantage of the low interest rates at this time to readjust their financial situation?
Yes, great question, Marie. Thank you. Yes, your home is one of your best possessions, as you all know. You can use it in so many ways to help out your financial situation. So if you are struggling with credit card debt and you have some equity in your home, you can definitely look to refinance it and consolidate all your debts. That helps you in multiple ways. For one, credit card debt, of course, is not tax deductible, but when you are paying interest on your mortgage, that is tax deductible. Two, the interest rate is significantly lower. As she mentioned, you're paying, probably 18% or higher on your credit cards. And if you put that into your home loan, you're probably paying probably around 3 to 5% right now because the rates are so low. Secondly, it will help your overall monthly budgeting and financial situation. Since everything's consolidated into one loan, you're making one payment. It's usually going to be a lower payment because your home loan is extended out over 15 or 30 years, and it's going to lower your monthly balance that you have to pay each month. So there are multiple benefits to consolidating and refinancing and putting all your credit card debt into your home. The one thing I would put out there to consider when you're doing that is how long are you going to stay in that home? Because when you refinance, there's fees involved with that. And you're going to have to make sure that the fees that you're paying, along with, consolidating the loan or your credit cards into it, make sure that you're not paying more and you're going to plan to move in a couple of years and you're not going to be there long enough to recuperate the benefits of consolidating all that debt. So there's things to consider when you're doing it, but it's absolutely a benefit to do it.
In addition to that, speaking from a Federal Reserve standpoint and former employee at Capital One, the one thing I would always tell anyone, if you don't have the discipline, if you know you don't have the discipline, when you refinance and you're paying off a credit card, close that account.
Yeah.
Don't leave that credit available for yourself for, if you had a $10,000 credit card, you paid it off through a refinance, and then a month later you say, hey, let's go on a trip, and now your credit card balance is back to 10,000 because you've just defeated the purpose. So that's just information that I used to share with customers. Please close that account if that is your plan and you want to better your credit and better your financial situation.
Excellent point, Aaron.
So speaking about credit scores, Carrie, if someone checks their credit score, does that hurt their credit?
No, there's multiple ways to get access to your credit. First of all, every year you're entitled to get a copy of your credit report for free from all 3 credit bureaus, and it's no expense to it, and it doesn't hurt your credit score at all. You can go to freecreditreport.com. Make sure you're on the federal site and not, there's another company that has a name very close to that where they charge you for it, kind of below the radar. But if you go to the federal site, you can get your credit report from all 3 bureaus to see everything that shows on your credit history. Another thing that a lot of institutions are doing now is they're providing you your score for free every month at no cost at all. I know with Bank of America, through their app, they have a feature on there where you can get your credit score sent to you every month so you can see what your score is doing. There's no fee to it. It's not considered an inquiry on your report. It's just giving you your score, though. It's not giving you your entire credit history and showing you all the accounts that are there. It's just your overall score that you have for credit. So there's a lot of ways to get free access to see what your credit history is. Another thing that you might see is The thing that hurts your credit as far as inquiries go are when you're applying for credit. So if you are out, and you're trying to get 3 or 4 different credit cards, and the companies can see, hey, this person's trying to get credit. Are they in a financial struggle, or what's the need for credit here? And it's usually around only 5 to 10 points that it might impact your score. But if you start applying for like 5 or 6 different things, that can drop your score about 30 points. So don't apply for a lot of credit in a short amount of time, because that can drop your score significantly very quickly. But it's really only those hard inquiries. That's what they call them, are hard inquiries, where a company is actually going in, accessing your report, looking at your history, and trying to grant you credit. There are also what they call soft inquiries, where a company like Bank of America might go to a credit bureau and say, give me a list of people that have a score from 700 to 750 and have credit card debt of 10,000 or more. So that's where you see those promotional credit card offers come in the mail. Those are called soft inquiries. It doesn't show, it won't hurt your credit report, but it's a way that banks and other companies will try to get a list of people to market to in order to target for certain financial products. Those are soft inquiries. Those don't hurt your credit report. But you getting your own credit report does not hurt your credit score.
Thank you. So just to add on to that a little bit, know your credit score. So like Carrie said, you get one free inquiry each year from each of Equifax, Experian, and TransUnion. Have that report with you if you're deciding you want to buy a car, or you're looking for a second mortgage or first mortgage, whatever the case may be, and be confident in that score, especially if you have that 730 or above. Don't allow these companies to run your credit report until you're ready to make a decision. Know that you have a good credit score, and no matter what, when they pull it, you're going to be okay in getting whatever it is you're applying for. So just a rule of thumb is what I normally do, especially if I'm looking to purchase something. I will have my credit report with me and say, hey, you don't need to run it right now. I'm just, I'm inquiring about your product, or whatever it is that I'm looking for. And, no matter how pushy they are, be confident that you have a good credit score. You know that you have a good credit score, and whatever you're applying for, you're going to be able to get it based off of your credit and your income, obviously. So just, be confident in that as well.
Gary, I have a question. I understand about getting your credit score from all the 3 different agencies. I heard once that you should ask for them separately every 3 months, get your credit report from one agency and then another and another. Any truth to that, or get all 3 at one time?
I haven't necessarily heard of that or any benefits to that. I don't know if anyone else can speak to that, but that's a new one to me. I can't think of what. The only thing that it might do is, if you stagger them that way, you can sort of see throughout the year if things are changing, or if something pops up, you would see it, rather than doing all 3 of them at one time a year. But outside of that, I haven't heard of that as a strategy, or I can't think of any immediate other benefits to that. I don't know if anyone else can chime in.
Okay.
Yeah, most people stagger it because of they want to make sure that there's no fraud on their credit report. So that's a good idea to do that if you have ever been, especially if you've been a victim of identity theft. So if you pulled Equifax in January, next quarter you might pull Experian and see that somebody may have opened accounts under your social, and that's a good way to identify fraud if you haven't already been alerted. That's the only other reason I've heard to stagger it.
That makes sense. Thanks, Aaron.
A quick question. The Bank of America credit score that you get, is that if you have a credit card through Bank of America, or if you just have a checking or savings account, is that service offered to you?
That's a good question. I'll look into that. I get it, and I have credit cards, of course, and my mortgage with Bank of America. So I'm not sure if that's why I have that service, but I'll look in to figure out if it's just a checking or savings, if they provide that same thing.
Next question. Do you the credit card, there's credit card companies, but then there's banks that offer credit cards, and there's credit unions. Would you advise getting one from a credit union or a commercial bank versus a credit card company?
Yeah, that's a good question. Anywhere that you shop for a card, you'll want to look at what the different benefits of those cards and the rates are. I, with my experience, credit unions typically have lower interest rates than other places. Sometimes you have to be a member of the credit union, like have a checking or savings account there. And in other places you don't. But anytime that you're shopping for a credit card, you want to look at all of the different terms and conditions around that credit card, and don't just apply for things because you see something in the mail. You see a lot of the offers that you see 0% interest rate, and those are typically very short term, like for 6 months, and then after that 6 months you're paying like 25%. Some places will charge you an annual fee. You got to look at that as well to determine, are they charging you $100 a year for the credit card? There's a lot of different terms and conditions you can look at. But as far as from financial companies to credit unions to banks, typically if you have a relationship with that institution, you're going to get a lower interest rate. As opposed to applying, to someone you don't have a relationship with, of course, then the interest rate might be a little bit higher. But in my personal experience, credit unions typically have the general lower rates, especially on loans, not just credit cards, but on car loans and even sometimes mortgages. Credit unions are usually very easy to deal with if you have a relationship with them. Does that help, Vince? Does that answer?
Absolutely. Thank you.
All right.
I just have something I'd like to suggest. Usually try not to even put things on your credit card unless you are able to pay them off within a certain frame time, like say 6 months, because you don't want to keep large credit card balances because credit cards are very expensive. It's a very expensive form of debt.
Yes, very good point, Marie. That was kind of one of my last points. I know we might have one or two more questions to go, but the key, not just in credit, but just in general with finances, is you have to have a plan. You have to have a budget. If you don't have all of your expenses listed and what your income is each month, so that you can see how much you're spending on different things. And I'm not just talking about loans and credit cards. I'm talking about groceries, gas, any expenses that you have each month. You should have a budget that shows, okay, here's how much I make, how much I bring home, not what my salary is, but here's how much I bring home each month. And here's all of my monthly expenses. And if you look at that and you see that you might have $100 difference after you pay all your expenses, then you might need to look for things to cut back on. But as Marie mentioned, if you're going to make a major purchase, make sure that you have a plan on how you're going to pay that off. And if you have that budget established with all of your expenses and your income listed, you can have that plan documented and make sure that you follow it month by month. Sometimes you'll have other expenses that come up, some emergency expenses or whatever. But if you have that budget and you know what your cushion is, as far as how much money you might have for, extra money to spend, you can balance those larger purchases or those emergencies that you have. But if you don't have a budget and you're just paying your bills blindly each month, you really don't have any control or any plan on how you're going to eventually get all that debt paid off and start saving money, and rather than just paying bills off each month, to be able to start saving. So make sure that you have a budget and that you have a plan when you're making those larger purchases.
Excellent point. I'm going to turn the page a little bit. We've talked a lot about establishing the credit. We talked about credit cards, how to get it, helping our youth. But Carrie, obviously, things happen, as you mentioned just a minute ago. You can plan, but sometimes life happens. So, for example, COVID-19, people may have lost their jobs, credit may have fell off a little bit,
Yep.
divorce, anything. What would be your suggestion on how to rebuild credit?
Yeah, yeah, I've had to do that myself, so I know exactly how that goes. Um, the one thing that people usually do when they start running into problems is they won't answer their phone, right? If they start getting calls, or if they know that they can't make their payments, they kind of shelter themselves a little bit from their debt, their creditors. Don't be afraid to pick up the phone and call your bank or your financial company and talk to them about what's going on with you. You will be surprised how flexible some financial companies can be. If you are forthcoming with them, you let them know what's going on, and they'll work with you to create a payment plan to lower your monthly payments or help pay things off. So one of the first things I do as soon as you're in one of those situations, don't be afraid to reach out to that company and let them know, hey, I just lost my job with this COVID thing going on right now. I know I owe this money to you. I plan on paying it, but I can only pay so much, each month. And they'll work with you. They definitely will. I can't say that it won't impact your credit all the time, but as long as you have an established payment plan working with them and you follow what you commit to, they'll work with you a little bit. Secondly, it's always better to have I got to be careful how I word this. It's better to have a negative financial payment history, but have the debt paid off, than it is to have a negative financial history and still owe the money and never pay it. If you have unpaid debts that you just let go and don't pay, that is going to significantly kill your credit score. But if you are making payments, even if it takes you 5 years or whatever to eventually pay things off, if other companies see, hey, this person had this isolated incident where they went, 60, 90 days late on their payments, but they still paid everything off in the long run, that can actually help your credit score. So don't be afraid to reach out to the banks to make those payment plans. And if at all possible, always try to pay that off and don't leave unpaid balances out there. We talked a little bit about reestablishing your credit before, or establishing. I talked about the secured credit cards and the secured loans that you can do. Even with negative credit, that is one of the best ways, and probably the first thing that a bank will offer to you if you go and let them know you want to reestablish credit. Put $500 or $1,000 in a savings account and get that credit card for that same dollar amount, and make sure that you are very religious on making those payments on time and trying to pay the balances off each month. And that will, again, help you rebuild your credit there. Lastly, you can always, again, try to get someone to help co-sign for you, and to help you get that loan or credit card. And again, you can reestablish that positive payment history through that method as well.
Hey guys, two things. When we were talking about the FICO score, I just wanted to add in that my credit union also shows me my FICO score for free, and I don't have a credit card with them. I just have a checking and savings.
Oh.
And Carrie, when you were talking about working with your creditors, I actually work with a collections company. So make sure you get everything in writing. If you're making any kind of arrangement when your debt defaults, get it in writing before you start paying on that arrangement, because we see a lot of times where credit card companies actually will still sell the debt to the collection companies. And now you think you're good with these with the debt with the creditors, but then now it's sold to collection. So now you're trying to figure out, okay, so who do I pay? And they sell it after you've already made an arrangement, but you have nothing to prove it. So now you're stuck in collection. So just make sure you get everything in writing before you either settle a debt or make an arrangement on a defaulted debt.
Very good point, Trell. Thank you.
Excellent. Well, we're coming up on the top of the hour. I know we started a little late. I kind of want to open it up to anybody. We've all experienced, whether it's been good credit, bad credit, rebuilding credit, establishing credit as adults here. So anybody want to share any additional knowledge? Carrie, definitely thank you for your professional knowledge and your experience, taking the time to answer the questions that were prepared. And hopefully for everybody on this call, this was a good taste of what's to come. The credit series is a 3-part series that we're doing. So our next call is not next week, but the week after. We plan to do this every other Sunday for the next, I think, 3 sessions. So, stay tuned. But if anyone has anything to add, please feel free to go ahead and do so now.
I just want to say thanks, Carrie and Aaron and everybody that provided insight, because there was so much information that I didn't know what questions to ask for, mainly for Sydney, who's getting ready to turn 16. And it's good to know that you can start even earlier than that in some cases to help with the line of credit, with establishing things. So they'll be off to a great start and won't have to worry about, figuring out things on their own. So I really appreciate all the insight, and I'm definitely going to share it and start implementing. And this is just the first series, so I'm really excited about the next 2. So thank you guys.
Anytime.
Yeah, I have just one last question about debt. How about medical debt? When you have an operation and you get this gigantic bill, and how does that affect? Because some of them bills are so awesome, you just like tear up the paper because there's no way you can possibly think of paying like this amount of money back.
Yeah, that's a good question, Marie, and I don't have a very good answer for that one. There are one of the biggest causes of people applying for bankruptcy is medical records or medical bills, because like you said, the cost is just ridiculous. I know, if you have insurance, usually the insurance companies will make arrangements for you over long term on how to pay things. They've become, it seems, a little more flexible over the last couple of years on those payment arrangements. So, again, reaching out to them and trying to work something out. There's no real magical answer to that I can throw out there and say, this is a way to get rid of it, or this is a way how to do it. But you can reach out to them to set payment arrangements. Some people, as you mentioned, end up having to refinance their house to cover some of their medical bills. It's just ridiculous. I don't have a magical answer for that one. I'll open it up for anyone else if they have any suggestions.
Yeah,
Normally,
the best. Oh, go ahead. Go ahead.
I do know that normally with medical bills, if you do make arrangements with them, they will not send you to collections as long as you're consistently paying on it. But once you default, it will go to collection. So that's what that I do know. Like, if you have large medical bills that you can't pay at one time, call them, because they are very flexible. I do know that, and whether it's hospital or just a regular, doctor bill, they will set up payment arrangements for you. Or sometimes they have like programs that they can either reduce it or erase it altogether. But you have to talk to them, and let them know the situation.
Yeah, great point, Trell, because what I was going to say, the key is to not have your medical account go into collections. If, you get $100,000 medical bill, call that company, call that hospital, whoever you need to call, make your arrangements, stay good on the arrangements. Even if you're paying $100 a month and it may take you to your death to pay it off. If you want to keep it off of your credit report, the best thing to do is just make the payments. Because that will not show up as a credit debt unless you don't pay it. And once it goes to collections, the only thing a medical bill will do is negatively impact your credit history. You can't positively impact it.
That the same for educational loans?
Not the same for educational, because that will actually show up on your credit report. If you got a loan for school 6 months after you graduate, or if you stop school, that is considered credit. It's actually considered a loan.
Do lenders take into account medical debt and educational debt? Do they look at that differently than other types of debt?
From a lender's perspective, on the medical debt, yes, they won't necessarily ignore it, but it, as Aaron or Trail mentioned, it doesn't necessarily show up on your credit right away unless it goes negative. Then you'll have a collection there. But lenders do look at medical collections different than other collections. They won't ignore it by any means at all, but they do know the medical situations, and legally we can't even ask about any medical history or what happened or what caused it. We can't ask those details as a lender, but when we see a medical collection, it is looked at differently than other collections. I can't speak to education though. I think since Aaron mentioned that's like a regular loan, I don't know
Right.
how those are looked at. Yeah.
They do look at that as for your debt to income ratio, your educational piece is added to that. Um, it doesn't weigh as impactful as credit cards or car loans, but it is a part of your debt to income ratio when you have educational bills.
A quick question. So when you're shopping around for a car loan, and all of these different finance companies are hitting your credit, or when you go to buy a house and shopping around different mortgage lenders and they go look at your credit, or let's say you want to rent an apartment and the apartment company, they look at your credit, and then you go for the utilities, and all of those utility companies take your credit score as well. So when you're shopping like that, all of those different hits, will that affect your credit?
It can. It not necessarily. It won't kill you. It won't like cut your score in half. It's like maybe a 5-point hit on some of the inquiries, and especially in a shorter term. I don't know that utility companies, those hits will impact your score as much. I know for rentals that they do pull a full credit report, so that will be a major hit, and car loans and other things, as you mentioned. One of the things that you can do as far as car loans, though, is to go out and shop for loans, not shop for cars. Shop for your car loan before you go out and purchase a car. Get pre-approved by one company. You can shop around. You can see what the different interest rates are. You can see what the fees are. And if you go to a place that you find, okay, this has a very good interest rate, they'll pre-approve you for a dollar amount, and then you only have that one hit. That gives you a little bargaining power when you go to purchase a car as well. You say, I'm already pre-approved with this company. Here's the amount I'm approved for. And that way they don't have to send your report off through a whole bunch of different companies to try to get you a loan, where they can send it to like 6 or 7 different places at a time. You can just have that one hit on your car loan and be pre-approved and use that as a negotiating power when you purchase the car.
Great point. All right, it's 6:08. I will go ahead and wrap this up by again thanking Kerry for his time, his knowledge, and everybody for the input that you shared, the questions that you asked. Again, we are about passing it on. We want to stick to that motto. We will continue to do not only credit sessions, but anything else that will impact the future generation, to create generational wealth and just to help them in life in general. We've done sessions on life insurance, estate planning. Our last session was educational that Monique shared with us in regards to just the housing market and how it impacts us as a people. So uh, stay tuned. If you've missed any sessions, obviously you probably have, because we're still not ready for what we call prime time yet. So we are building this thing slowly. But if you want to see any of the or hear any of the recorded sessions that we've done prior, please feel free. Reach out to Vince. He's been our I would call our storage person at this point. And if we know of any family members who are, very technologically sound and being able to make this thing go to the next level, please send them to us. And with that said, anything else, Vince or Yolanda, Carrie, anybody want to add?
Nothing on my part. Thank you guys for having me. And if you have any other questions, I'll be happy to talk offline as well.
Yeah, nothing on my part either. I do thank you again, Carrie. This was a fantastic session. I appreciate all the time you took to prepare for it. It is just something that really was eye-opening. It sounds like for others besides just myself, it was really good. I took some good notes and stuff. So thank you. And yeah, I'm really excited too about what's next. Vincent, did you have a sign off, Shad?
Yeah, I just want to thank everyone for coming on, and I just want everyone to remember that we're just sharing knowledge and sharing information. So don't be afraid to add your input or add your expertise or knowledge, or ask any questions. These are recorded sessions, and they will be here for the next generations to come. Right now, we are canning all of these, and we're building a repository. Like Aaron said, we're waiting for someone who is technologically sound, like you said, to edit some of these videos to make it a nice professional format to roll out to the family. However, we do have them on YouTube, but it is private, so I would have to, no, you can subscribe to it. It's Passing On Tribal Knowledge to get some of the previous ones, to kind of catch up. But those are the unedited versions. So we want to make them a lot more professional. We have some things in the works forthcoming. So stay tuned. You can, invite some more family members, and, don't be afraid to participate, ask questions, and share knowledge. That's what this is about. So again, thanks for coming. Hope to see you next time. I'll pass it on to Shed.
I just wanted to add that just thank you for everybody for participating, and everybody that is participating right now. Just challenge you to use this as a tool to take you to another place and take the generation behind you to another place and to another level where you would see them and like them to be. That's what this is all about, and this is just another block building onto a great foundation of something that we're starting. So this is awesome. It's very exciting. But just know that we're open for more input. We're open for more participation. If you guys have an angle that you want to know about or that you feel like you know about, by all means, share. That's what it's all about.
Okay. That's it. Happy Sunday, everybody. Love you much. Bye-bye.
Love you.
Bye-bye.
Bye.
Bye-bye.